We do seem to be live, which is wonderful news. I want to walk you through here today all the myths and all the noise and nonsense that's out there today around stocks, what the mainstream media is telling you, which is largely gobbledygook. Instead, this banker and his golden retriever, who's sleeping in the kitchen because it's colder in there, will walk you through what's happening today, what you need to know, and how you make more money from it. That's the simple premise here. Myth busting is a little bit what we're going to do here today. Before we get cracking, if you want to figure out how I make money, I run a small portfolio live for the community. We did 126% in 2022, 105% in 2023. That's return on capital employed. And then this year so far, we are up about $14,000 on a 30K portfolio. So just shy of 50% up there, just shy of halfway through the year, which just sounds about right. So if you want to learn how we do that, very, very simple. 3 steps, automations and rules. You want to know all the rules and exactly the full program, come and join me today, literally in about 11 hours at 8 p.m. Eastern time, and we're going to have some fun together, and I'll give you the whole thing. Warts and all, the whole thing. So go to felixfriends.org/webinar. Link is down below in the description, and you can grab yourself a completely free seat. Now, this is the top of the list. That's surprising. Why is that the top of the list? Okay. Here we are. This is what I wanted to kick off with exactly. Everybody is saying, oh no, this rally can't continue. It's even more overbought than yesterday. And it's this indicator down here, which is the RSI. It's a momentum indicator. And it is breaking out. You can see that here. Highest levels since, I don't know when, 2019 or something like that. We had these highs before, and then somebody will always commit some sort of chart crime and say, this is where we peaked, this is roughly where we peaked, and this is sort of where we peaked, except we didn't. So it doesn't matter. No, as long as the rally is driven by fundamentals, which means better earnings, this doesn't bloody matter. So I wouldn't quite outright ignore it, but I would not be basing massive investment decisions on this unless you want to get a little bit more cautious, which might be a good idea. Of course, none of this is financial advice. And then people are telling you the markets are at extreme levels. We're actually fearful as a market. Fearful is where we are. We're nowhere near greed or extreme greed. So no, we're not. We're kind of like not even halfway to greed. So therefore, again, market not at extreme levels. So let's calm down, right? And then you get this, NVIDIA is crazily expensive. Well, if you look at profits of NVIDIA, which is the white line here, that's profits. And then in blue, you've got the NVDA stock price. Do you see a correlation? Do you see that they move together? And do you see that NVIDIA today is cheaper than it was at any time in recent history? Yeah, you do, right? It's cheaper than all along here, right? Because profits are going up and up and up and up. Or certainly cheaper than it was last year. So again, NVIDIA actually, surprisingly, very surprisingly not expensive because their numbers are so magically wonderful. And then everyone's saying, well, it can't continue this rally. It must collapse very soon. Well, who's the biggest buyer? We're going to get to that in a moment. Who's the biggest buyer of stocks and what's going on with that? Because that's actually something. The one thing that we should probably be concerned about today, which we get to in just a moment, is companies. Companies buy their own shares, right? Buybacks are, if I could spell buybacks, do you do that? My brain always omits letters. I don't know, dyslexic or something, who knows? There is more cash in companies than pretty much any time in history. US companies are sitting on 4.1 trillion in debt, which is about 12% of the US debt. But what are they going to do with that? Well, they're going to take that money and they're going to buy back their own shares and they're going to pay dividends and all those glorious things that make us pesky investors happy because we're greedy, right? We're here for the money. Are you here for the money? If you're here for the money, hit the like button. And Travis, we'll get to some chart analysis here in a moment as well. And then you've got people going, but the Fed can't cut interest rates now. We won't get a rate cut till like December, maybe later, maybe never. Well, Goldman Sachs, the bankers with the soft heart, are saying, ultimately, the key driver of labor demand is the economic activity, and GDP growth has slowed meaningfully. And we'll look at today's data in just a second as well. So the Fed is surprisingly hawkish, but we feel good about our forecast of 2 cuts, one in September, one in December. So rate cuts are coming. And why? Because the economy is slowing, and we'll see that again today. And listen to the guys who deal with the consumer, right? Who deals with more consumers pretty much than anybody else out there? Walmart. They say many consumers' pocketbooks are still stretched, and we see the effect that's having on our business mix as they're spending more of their paychecks on non-discretionaries, so groceries, essentially, stuff you need to survive, and less on general merchandise. This was on the earnings call a couple of weeks back from Walmart. It's all out there. It's not a secret, right? You just need to read it or listen to it or, hey, even subscribe to this channel. That was a smooth plug, wasn't it? I thought that was quite well done. I think I should deserve a thumbs up for that at the very least. And then people are telling you this. There's another myth. Index investing is the best way to build wealth. And I know how to go at that yesterday. Was it yesterday? And yes, it is better to buy the index than not to invest by a million miles. But what is better than buying the index? Well, owning the Magnificent Seven by discount, because they've outperformed by certain percent, factor of 45, something like that. 45x outperformance, I think, since 2015. So if you'd owned the Magnificent Seven, you'd be 45 times better off than if you own QQQ. Still think index investing is the way to go? I mean, for the really lazy, it's not for the lazy, it's for people who don't care about their money, who don't care about being wealthy, who don't care about money at all. So maybe you live in a tin hut and you don't go to work. But if you go to work every day, presumably you go there for money. You should really care about making more money from your money, right? So come and join us today at 8 p.m. Eastern time, and I'll show you how we make money from our money. Now, this is the big boy. This is the big one. This is the number that I would write down. Buybacks are the biggest buyer of stocks out there, have been all year and all of last year. And we go into these blackout periods where they are not allowed to buy. And it's basically 4 to 6 weeks prior to earnings. They can't buy stocks. Then after earnings, the buybacks come back. So the buybacks were back with a full vengeance. And now we're here, roughly. That means all of these stocks here are going to enter the blackout period in the coming days. And that blackout window, so the blackout period, lasts until 19th of July. So you're going to see a little bit less bullish activity out there from now to 19th of July. And then the party's going to keep going. So again, if you know that, well, you're much better placed to, like, if you want to buy long stocks for the long term, that's probably a good window to buy. If you're trading, you might want to be a little bit more cautious to the downside and so on. So it's very, very important to understand this. Again, information's out there, right? So now you know. So as I say, come and join us, right? See how we're up 50% so far this year. Literally, can you see that? Performance this year, $14,000 on a 30K portfolio. And that's using a strategy that's 3 steps. It's automated. I do it in 2 to 3 hours a week. 2 to 3 hours a week is all I do. So you can join that. Could you do it with more money? Yes. Could you do it with less money? Yes. Just come and learn it, really. It's fun. It really is fun. It's great fun. FelixFriends.org/webinars, the link down below. And we're going to have a blast later today. Now, the Elon isn't just sending us all to Mars and, curing world hunger or whatever he's doing, but he's also building the next Venmo. Now, interestingly, the next Venmo, of course, is what? A PayPal company, right? It's a PayPal offer. And Elon was a co-founder of PayPal. Yes, he was. And how do we know this? Well, he had to file for payment approvals. So dozens of documents the company has to submit to state regulators, give a new view of the business. Those plans include a Venmo-like payment feature that will let users store money on their X accounts, pay users or businesses, and even buy goods and services in physical stores. And they have been approved for money transmitter licenses in 28 states. Now you need 50 to cover the whole bloody country. And that might take years, apparently. And so much for the good US of A being quick on regulation. And it would also submit applications for international money transfers after securing permission to operate in a majority of US states, which they now have. So they're going to also apply for that. So what does that mean? Is it the end of the world for PayPal? No, probably not. Although PayPal probably isn't enjoying the news this morning. We'll have a look at that in just a second. Ethan is asking, what's the reason why companies can or can't do buybacks? It's just regulation. The idea being you shouldn't be allowed to do buybacks so close before disclosing financial information to the market. That's kind of the idea. It's just regulation. Not necessarily makes a lot of sense, but it's just the way it is. We've triggered the Ramsey horde, have we? Oh, you mean with the index investing? I know. It's easy to trigger. So to build a payment processor is a bit chicken and egg, right? You need a lot of people on there. PayPal makes their money from merchants, not from transfer fees largely. And therefore, this isn't at this point a competition. I think basically Elon is turning X into what the Chinese call WeChat, which is an app that is starting to look and smell much more like X. And when he was in China a couple of years back, he gave an interview saying he loves WeChat and he loves this app and he wants to build it in the US. It's exactly what he's doing. So it's kind of ironic, really, isn't it? So yeah, WeChat is the #1 payment device in China, followed by Alipay. Maybe they're about head to head. So interesting he's doing that. And I like that he's doing it. I think it'll make X a lot better. But I at the moment, I don't see really that being a headwind for PayPal anytime soon. Now, Palantir here. Now, I took this screenshot just before the market opened. So let's have a glimpse at where we are live right now. We are trading at 217. No, on Apple, PLTR. Let's see. We are trading at what? 25.10. We're at 25.16. Okay, not a lot's happened here. Well, so what do you see? Well, you see a beautiful green candle there. Let me get a green pen. Let's get maybe a white pen will do the trick. It's a bit fat, isn't it? Beautiful green candle there. We saw we sort of turned green about here, right? That's where we turned green. See the background? The background color gave us that early buy signal. And where is the resistance? It's here. Can you see that? No, you can't. Okay, let me zoom out and shift over. The green candle here that I'm pointing to here, that's your resistance. Resistance, if I could spell resistance, is at $25. So the fact that we are sort of limping around $25 isn't really surprising. And that resistance is there for this week, but also for next week, I think even next month. And if you put a line across from 25, there we go. And then support is that red line down there. Support. The chart's from Trade Vision, as it's now called. If you go to tradevision.io, you can get yourself a free 30-day trial to this. So what do you see? That we are trading basically exactly in that range, right? So we hit our head here, a few times there, support kicked in here and here and here. So the question is, are we going to meaningfully close above 25 today? That's what we need. Otherwise, we're going back to 25. So the buy signal here was good, right? It said buy there, here. When the background turned green. But right now, if I had a trade open on that, I'd probably be exiting right now. Of course, I hope it's going to go higher, but we need to kind of see the proof here in the pudding. Now, here's NVIDIA. Let's have a look at that setup. And what do you see here? Well, you see up here, that green bar up there, that is resistance. I know I'm writing. Okay, it's at 140, right over here. It's easier for you to see. At 140, and support seems kind of irrelevant at this point. So we've got a bit of a way to go. I'd say to rally up. There's a little bit of resistance also at 135 here, but it's a little bit less. 140, I think, will be next one. So NVIDIA, how's NVIDIA looking this morning? NVIDIA. 131.16. Where did I take the screenshot? Okay. Come down just a little bit, but not meaningfully. Not meaningfully. So we're still kind of in that trading range from yesterday. And then let's look at a few more. PayPal, as we were just talking about, is PayPal getting hammered because of Elon's X announcement that they're going to process payments? Trading at 59.79. It was, it's losing like 30 cents. So the downward trend continues, and you got to ask yourself, where does the support sit, right? So support is here, that red line there at $60. That's your support. So you want to see the stock bounce off that today. You don't want it to close meaningfully below 60. And yesterday that worked well. Today a little bit more bearish news perhaps because of the X payment thing. So watch that. If you drop below 60, then likely we're going to go a little bit lower. And I'm going to kind of watch that because I like to buy the dip on PayPal, right? So ideally close to the 60 line as possible. So like, here was a good point. Here was a good point. When we are kind of solidly in the red in terms of background, that's when I like to buy PayPal, or at least PayPal leaps. For Apple, let's have a look at the live market here. AAPL. Trading at 217.38. What was my screenshot? 217. So it's just down just a touch. But the real resistance sits up here at 220. So if I draw a line across here, see that? 220 is the resistance. And did you see that had an impact here? And we get very close to it here. Yeah, it bloody works, doesn't it? That's the resistance going into next week. So we might see a little bit of like sideways action here on PayPal. That's what I would expect. Is 120 as support? What stock was that on? On NVIDIA, there's a bit. I mean, not a huge amount, but yeah, there is a bit of support here at 120. People are not really hedging this. They're just going, gung-ho, let's go, 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 sort of thing. So the NVIDIA crowd is a little bit bullish at present, which is understandable. The stock's done tremendous things here. Now, apart from that, if you are interested in French cheap things, France is on sale, thanks to the electioneering nonsense going on over there. And SocGen is down 17%, BNP Paribas down 18%, Credit Agricole minus 18%. This is since mid-May, trading now at discounts to pretty much every European bank out there, historically quite attractive. So could be worth a trade to wait that out. It's fairly unlikely that Le Pen gets which is the far right in France, that they get a majority. And even if they do, they're likely to become a little bit more centrist. Generally speaking, the far right becomes a lot more centrist once they actually get into power. So I don't think it's the big deal that people make it out to be. But at the moment, the Europeans are a little bit shaken, not stirred. And then we've got today's data. Retail data in today. And what do you see with retail data in today? We got that. What's that? That is 0.1% more retail spending. We were expecting 0.3. So we're expecting 0.3 and we got 0.1. And last month's data got revised down from positive to negative. But no, there's no recession, at least not until after November, whenever the election is. So it doesn't look good, does it? It doesn't look good. And I've been saying that for a little while. Like, be cautious with retail stocks, right? If you listen to me ever, obviously do your own research. And Fisker is bankrupt again. And Henry Fisker, second EV startup, bankrupt once more. I'm sure he's going to start a third. And he blames the general macroeconomic environment, not shitty executions and crummy cars and lack of funding, which is usually what kills startups. But yeah, so that's kind of where we are at this morning. If you have any questions, let me know. Ask them, ask away. If you haven't already, come and join our live trading session in literally, 11 hours, 10 and a half hours. So we're going to have some fun. And I'll teach you exactly how I make money from trading in about 3 hours a week. The full automations, the full rule book. I give you the whole thing. Nothing held back. So come and join me, felixfrentzen.org/webinar down below. Is Trade Vision still free for 30 days? Jean Moreau? Yeah, absolutely. Absolutely more. You can check that out. And NVIDIA, Apple are in the green, Microsoft in the green, Meta is down slightly, Google is flat, fat drugs are floating to the top, Tesla is flat, MasterCard flat, Amazon flat, everything is flat, Berkshire is flat. Everything is pretty much flat. Qualcomm is rallying a little bit, as is AVGO, Micron as well. So semiconductors are having a good morning. Everything else is sort of a little bit. You'd expect retail to suffer a little today from the retail data, but it hasn't suffered greatly. Because I think everybody out there is kind of smart enough to realize that the consumer is in trouble. It's just US government is trying to lie to us, and I think we're a little bit smarter than them. Ben says, so you would not trade Apple. I think when something is at sort of a cusp here, like Apple right now, where we're just below the resistance, yeah, you could still trade it, but you just need to be a little bit more cautious with it. You know what I mean? You just want to be like, well, I realize that there is a likelihood here of hitting our head at 220. So if you're feeling very, very bullish on this, then I don't know what you could do, but you could definitely do something. You could, and again, this is obviously not a trade recommendation, but say you moved your trade down here to 205. Ideally, you'd want to be at 200. That's where the support sits. But then there isn't really going to be any money in this trade. 9%, which isn't really enough. So, I don't know. You could find something. You could also trade it the other way and be... Wouldn't necessarily recommend it in the current market environment. But if you were bullish, then you could go, again, significantly above where the resistance sits and sort of be somewhere up here with your trade. And if that means nothing to you, come and join me 11 hours and I shall enlighten you. Are you mostly invested in tech stocks? No, not at all. I'm probably much more diversified than most of you. Of course, with Microsoft and Meta and stuff like that, yeah, that's a little top heavy. But there is a lot of stuff in there that is non-techy. I've got a bunch of videos out, like how to pick great stocks and stuff. If you check out my educational playlist, you can see my portfolio. I did one a couple of weeks back where I show you my portfolio. You can see it. Ben, my pleasure. Fortnite has asked Santa for a crash. Yeah, I think we got a little bit of time here on the party train, which is nice. Let's have a look at Bloomberg. US retail sales barely increased in sign of consumer strain. Yes, there we go. And Feds Williams says economy is strong, needs more data for rate cut. Believe in anything. And Goldman sees US jobs at inflection point, sticks in 2-cut call. I think they're probably right on that one. And Boeing is still losing parts, which is interesting. I mean, what does it take for Boeing to become a Palantir customer, you think? You think anything is going to make them do that? Heat waves are deadlier than hurricanes. Make them disasters. Oh, really? Really heat warning? I mean, do you know what the temperature is here? Weather, Hong Kong, where I'm right now. Right now, if you're in Fahrenheit, it's 85 degrees. Humidity is 86%. And this is sort of cold. It's about 90 in the middle of the day. And you know what? It's bloody lovely. And do I hike in this weather? Yeah. Short ones. Not like crazy ones, but yeah. Winston can do it too, as long as you got a lot of cold water for the chap. You invest in emerging market nations, limited to very limited extent. You always have to assume that stuff like that gets written down to zero. If that's your assumption, then I think your allocation is okay. That's the way I would look at that. What do you think of SoundHound? pretty small, isn't it? I did a video on that, I thought, the other day, and it's just very small. It's just very little revenue to judge them on. And I'm not sure it should be listed, to be honest with you. That's kind of the way I feel about very, very small companies. I appreciate they want to raise finance, but I think you kind of have to find that finance from professional investors. What's the market cap on this thing? 1.4 billion. What's the revenue? Like virtually nothing, right? 50, 60 million. So, is it that good? Is the product that good? I don't know. But it seems a little risky. That's the way I would look at that. King, I accidentally put AVT puts instead of calls before earnings. King, cost me 15K. Okay. First of all, make your trades really, really freaking small. And what I would say to you, King, is defund your trading account, paper trade for 6 months. And after that, after you've done that, you're consistent, you're profitable, you allow yourself back to go live. And it will be the best investment decision you've ever made. Trust me. Because you will save so much money doing stupid stuff. It cost you 15K. Crikey. You could have learned one-on-one from a bunch of investment bankers and market makers for a couple of people with that. Why is Amazon down? It's more than just retail. Is it? Well, look at the pattern here, right? Okay, let me pull it up for you on here where we've got our indicator. In Trade Vision, we got our own proprietary indicator. And look at that. You see the lines I put in? Resistance at 185 at 190, I wrote. Still holds true, right? So we sort of trade in this zone. Support kicks in down here at the lows, and then we typically bounce back up. So it's kind of to be expected, I would say. So you could trade that range and make a lot of money out of it. What's the biggest stock that just flipped? Stock buyer that just flipped, Jack. Okay, I'll do a quick recap just in a second. Heat is dangerous for Westerners, says Charles Hutchinson. I think we're not made. I mean, yes, we're a little feeble. I grant you that, but we can sustain a bit of heat, can't we? I heard you can work during typhoons now, says Logan. Yeah, apparently the Hong Kong Stock Exchange will be open during typhoons, which kind of makes sense, doesn't it? I mean, we can all work from home. I don't really trade the Hong Kong stock market, so it doesn't really bloody matter to me, to be honest with you. But yeah, apparently they're fixing that. Just because we get so many typhoon days and black rainstorm warning days and all that stuff, we live in the tropics. It's like Miami, the climate here. So you kind of have to deal with it. This is what the market looks like this morning. Looks pretty good. Looks pretty good, I think. Considering the abysmal retail data, market's taking it quite nicely. You would expect consumer durables to suffer particularly. So your Teslas and so on, can we open that here? GM, Ford, all the car companies should be down, which they are. What is Lena? Real estate related finance, investment management services, home building. Okay, never heard of it. How big is that? 40 billion market cap. Oh, you learn something every day. So yeah, market flattish, but with a green tilt here this morning. And if you just tuned in, I'll do a very quick recap for you. Okay, we'll do a quick recap just for those of you who've just tuned in. First thing, of course, first. Do you want to know how we made 125% in 2022, 105% in 2023, and so far this year we're up just under 50%. We're up 14K. And this is a 30K portfolio that I trade with, $30,000. Why so small, you might ask? Because I want to encourage responsible trade sizing and also show what is possible. Not promising returns, of course, but I am promising you to show you exactly what I do and how I do it. 3 steps, 3 rules, full automations after we set up trades, and takes 2 to 3 hours a week. If that's something you might be interested in doing, then to make your money sweat harder than it already is, then come and join me in 11 hours at felixfriends.org/webinar, and I'll break it down for you. I'll give you the whole strategy that I do. And everyone's screaming the market's overbought and therefore we can't possibly go any higher. Bollocks, I say to that. When you want to rally because fundamentals are getting better, because earnings are getting better, because tech's getting better in a profitable, meaningful way, you can be overbought for a very long period of time. and the market isn't at an extreme level. We are in fear zone still. We're heading into neutral. Greed and extreme greed are a fair distance away in terms of market rally. And for those of you who are thinking Nvidia is expensive, well, the white line is their profits. The blue line is the stock price. And can you see that the stock price is moving with profits? And therefore, actually, Nvidia is cheaper than it has been at any time in recent years. I know, it seems weird, doesn't it? And then there's all this money. There's all this money gushing about inside companies, and they can do buybacks with those. It means the market, the stock prices keep going up because there are less shares. They reduce supply, and they can also pay you dividends, which again pushes up stock prices. So $4.1 trillion sitting inside US corporate cash holdings. Cash holdings. Crazy, right? Absolutely crazy how much money there's floating about. And Goldman's saying we're going to get rate cuts in September. I kind of agree with him on that one. I think it's very likely. It might also get the geriatric one re-elected. And Walmart was warning before today's data. That's when I made that note. They were warning that consumers are spending more of their paycheck on non-discretionary categories, which means stuff you have to buy to live, you know, groceries, water, Starbucks. You can live without Starbucks, apparently. Most Americans would disagree with that. And then people are saying, well, what if you just buy the index? You'll be rich eventually. True. But you could be richer if you picked good stocks. And then you're saying, oh, that's so risky. Isn't that what the ETF guys tell you? Because they want to collect your fees. There is something controversial. It is far better to put your money into an ETF, into the index, than to do nothing. Okay, I agree with you on that. But it would be far, far, far better, like 45 times better, to have bought good quality stocks. You would massively have outperformed the index. That's what this chart's basically showing you. And buybacks are the biggest stock buyer out there. Biggest stock buyer out there. And they're about to enter the blackout period, which means there'll be no buybacks, which means the biggest demand driver of stock purchases is Fugazi. And that scenario is going to last until the 19th of July. So maybe put a little note in your diary, 19th of July, blackout period ends. The stock market might be a little bit more optimistic from the 19th of July onwards. So we might have a bit of a period of consolidation coming up, and then we might look a little bit more positive. We don't look for consolidation in our portfolio. We look for massive gains. That's kind of the goal. But seriously, come and join me. Learn today how we make money from our money and how simple it is. I think you will hopefully be pleasantly surprised. We're going to have some fun, and you can ask me all the tricky questions as well. My European friend there without the screen name, I'm running, you've worn me down, I'm going to run a European session on Saturday. So I think if you go to that link, felixfrancelog.com/webinar, if you are presently in UK or in Europe, you should see the Saturday session pop up. If not, try again tomorrow. And you can join me at a more humane hour. I think 10 a.m. London time is the plan. Musk is launching the next Venmo with X. How do we know that? They filed a bunch of stuff with regulators. They got 28 money transmission licenses. And they still obviously have 22 states to go. And they're also going to apply for international money transfer licenses and so on. All part of Elon's plan to turn X into WeChat. I'm going to skip through the chart analysis here. If you want to watch that, check it out, as well as a couple of interesting numbers here. But yeah, the US consumer spent only 0.1% more this month. And in the previous month, that was revised down into an actually negative number here, which means maybe this month was also negative, and they might revise it down again later, but nobody's listening. Are you a frequent user of the Iron Condor strategy? I not frequent, but I do use it. Yes, I do use it. If I think a stock is range bound, and we're looking at Amazon here, for example, IV's a little low, but you could do something like this. For those of you who don't know what an Iron Condor is, let me go out a little bit in time here. So what would be the madness that we would do with this? Hang on. We would do something like this. Crazy how. Where we basically, well, we probably want to go a little lower. maybe go a little higher. There's no volume there, so. Okay, as a hypothetical. What does it mean? It means the following. Let me put some lines in here. It means that within this zone here, wow, that was not a straight line, was it? No, this is a straight line between here and here. You would make money. So anywhere in this zone, you make money. So the stock can go up basically 6%, or it can go down about 6%, and we make money in each direction. So you're creating a corridor, basically, a condor, an iron condor, to make money in, and that's a particular strategy that we do use, and it's quite powerful. It's worked quite well on this one. It would have worked quite well on this one. What would be your preferred IV, high IV? So if that was like 70, I'd jump all over it. At 20, I'm a little bit on the fence on it. King, your micron calls are up 7K at the moment. Sell that, says Logan, take some profits. But at the very least, set a trailing stop loss, right? Make sure profits never become losses. Really, really important. And you can do that with a trading stop loss or just a stop loss. And that's one of the best rules, I'd say, for traders is never let winners become losers. If you follow that rule, you make a heck of a lot more money. Ticket to health, someone call me by phone, Felix. It's possible. It's possible. If you've got a telephone device, it's entirely possible. You can always email me if you want to know whether the people contacting you are legit. You can do that by give you my email. I'll pop it in here. Felix at Goat. Oops, what happened to the at? At Goat Academy.org. Okay. You do that, you can ping me a message, I'll reply you, and you know that it's actually coming from me. Radio. Any other questions, chaps? Pop them in the chat. And if you haven't already, make sure you join us in about 10 hours by now, 11 hours by now, for our live trading session. And let me show you how we make money and how fun it can be and how we can do that in 3 hours a week and so on, and how we can make potentially, and I'm not promising you returns, I never do, but I promise you to show you exactly what I do and how I do it. And we've done quite nicely. 2022, 126%, 2023, 105%. That's return on capital employed. And this year so far looks a bit messy, doesn't it? What did we do there? No, that was a thing. We've done, where did our pens go? We've done $14,000 so far on a 30K portfolio. So we've done about approximately that, 14,000 over 30,000. So if you want to learn how I do that, learn the rules, learn the systems, 2 to 3 hours a week, 2 to 3 hours. And I know people can't believe that sometimes, but just come and be the doubter in the webinar and ask all the questions. You see everything I do. I show you the trades I've done and everything else. Nothing held back. I always want to be 100% transparent. eBay says the webinar will be held on Saturday, 22nd. That's the European session for you guys who are not necessarily awake in the middle of the night. But if you can't get signed up, Evi, is it Evi? Then, as I say, pop me a quick email and I'll get you sorted. Email, I'll put it in the chat here so you can copy it. Felix at goatacademy.org. So if you're in Europe, you should get the Saturday session. If you were in the US, you should get the US session. I'm not sure where you're based, Evi. If you let me know, that would be glorious as well. No goats were harmed in making of this academy, says Carl. No goats were harmed at all. In fact, we've donated quite a lot of money to goats over the years because goats are quite glorious creatures. They look very much like Winston, don't you think? I think he has a very, very goat-like features, really, especially when he's on the top of a mountain. Markets look good. Enjoy it. Enjoy the green. Make some money. Learn to become a better investor and prepare yourself for the inevitable downturn. And that's not a doom and gloom thing. It's just, it's inevitable. At some point it'll come. And you can either be then brilliant, I know exactly what to do, let's make some money, or you can be like, no, or like everybody else. So kind of up to you. If you want to be part of the first gang, come and join me later on today, 8 p.m. Eastern time at felixfrenzelog/webinar.